In terms of credit, my industry, as we go into second quarter earnings, it's not horrible. It's still mostly a commercial credit story, and the consumer is the big question mark. That's really what people don't know. If you look at the numbers that the Fed assigned to certain banks, it makes you wonder how worried they really are about a recession. It says to me they're quite worried.
Chris Whalen, chairman of Whalen Global Advisors, author of the Institutional Risk Analyst, also author of multiple books, and an investment banker and an independent analyst and a friend of this show. It is so great to welcome you back on. Chris, I love having you on every month. It's something I'm looking forward to. So it's great to have you. Thanks for joining me.
My pleasure.
Well, I feel like a lot has actually changed and transpired in last month since we last had you on. And I'm sure you made some prescient calls as well. Let's start with the big picture, an update on that macro view, where we are in the economy, the framework in which you're looking at the world. And one of the things, again, Chris, take all the time you need to set the table when it comes to that big picture macro view.
Well, I think what you can say, both from some of the consensus discussion and also from the data, is that there are parts of the economy that are slowing down. Housing is certainly, I guess, running out of buyers is the way I would put it. We still have an inventory problem, but over time, this is going to fix itself. People have to move sometimes. There are other things that occur in the family life cycle that just force people to move. So you're starting to see a little of that, but we're a long, long way from any kind of housing boom like we saw back in 2021, 22. You know, we barely did $1 trillion worth of mortgages last year compared to 5 during 2021. So the industry is kind of very quiet now. And the rest of the economy, depending on what you look at, Julia, I think it's not a bad picture. We continue to see a lot of volatility in the week-to-week and month-to-month data that the economists look at. In terms of credit, my industry, as we go into second quarter earnings, it's not horrible. It's still mostly a commercial credit story, and the consumer is the big question mark. That's really what people don't know. Now, we did do a piece on the Fed stress tests overnight that we put up on the blog, and what I would tell you is if you look at the numbers that the Fed assigned to certain banks, it makes you wonder how worried they really are about a recession. It says to me they're quite worried.
Expand on that. That is interesting. If the stress tests they put on banks are indicating that they're worried, can you just elaborate a bit more and share some more color there?
Well, I take some of my former colleagues at the Fed to task for their methodology for the stress tests. It's mostly going back to Timmy Geithner in the first year they did this about building public confidence in banks. Because they don't mention that a lot of the industry is insolvent. They don't mention that the Fed itself is deeply insolvent. And they kind of show you assumptions of loss that tell you more about how the Fed feels than about the actual bank. And since you can't compare the results one bank to the next, the methodology is such a mess and so subjective, you can only look at it and say, what are they really telling us? So, for example, Ally has an assumed 40% loss on their credit card book, which is twice what they gave Capital One and Citi. So that's a pretty horrific number, Julia. And then you look at Goldman, and Goldman had some big numbers, both for credit loss and just in terms of counterparty risk. And again, you say to yourself, what is the Fed thinking behind the scenes that they would assign these kind of numbers in a stress scenario? So that was really my takeaway. I think the economy is okay, but I think we're kind of whistling past the graveyard in a sense because we've had such a long period of expansion and boom, particularly in housing, that, you know, it kind of stands to reason that we're going to swing the other way at some point.
Right. When you raise the question, like, what is the Fed thinking? If you had to kind of put yourself in their shoes or put yourself on the grills on it, what do you think they're thinking?
Well, I think like most analysts that really focus on the micro data from financial institutions and public companies, we worry about the volatility in a lot of these data sets. We worry about rate of change showing up in, a future quarter this year, for example, in consumer defaults that takes everybody by surprise. But is it really a surprise? We've had defaults in credit generally suppressed since the 2008 crisis. That's what low interest rates do. They force asset prices up, home prices, for example. So it's hard to lose money if somebody actually, defaults on their mortgage and you have to foreclose. That almost never happens. Mostly consumers who are in trouble, who've had a couple modifications that have failed, they'll sell the house and keep the excess. And that's what they should do. Go find a rental and put the cash in their pocket. So, the home price activity we've had in the last few years is an opportunity to help people who maybe ought to get out of the housing market now. But at the same time, it's not horrific, Julia. Not at all. Not at all.
Yeah. You mentioned earlier that consumers, when you look at the economy, it's not a bad picture, but you mentioned earlier that consumers are the big question mark. Can you elaborate more there?
Well, when you have commercial defaults, you mostly don't see them. They happen in a conference room somewhere. And only if it's big enough that it becomes a publicly reported event do people focus on it in the news. It hits the headlines in Bloomberg or the Wall Street Journal, right? With consumer, it's in your face. And government is focused on consumer. So if you see an uptick in defaults on credit cards, auto loans, what have you, it immediately hits the news because that's, it's front row. That's what all media organizations are focused on, consumer, because that's where the people are and that's where the political focus is as well. That's how you get attention. Politicians don't want to talk about helping commercial landlords with, shopping malls that are going into foreclosure. But they should, because a lot of these businesses were damaged during COVID. They had apartment buildings where people were given forbearance on their rent, and they never made it up. So you're seeing a lot of these small and mid-sized developers forced to default. In fact, Starwood just had another default last week out in California. So it's all over the place. And again, it's a commercial story, so people don't hear about it. It doesn't affect the narrative, but consumer does. You see consumer defaults on credit cards significantly higher in the second quarter, which is possible. Then I think you'd see a change in mood.
You mentioned the politics of it. I imagine the commercial, it would be more of like a silent crisis. Can you kind of walk us a bit more through the commercial situation, maybe bringing in the political side of that as well?
Well, it depends where you are. Commercials, like all real estate, is a local story. So Chicago, for example, where you have had multiple defaults by large office buildings inside the loop in the whole downtown area. You've also had a number of apartment buildings along the lake trade. And these were heretofore very valuable, premium kind of properties, but some of them have traded at half of the last assessment, Julia. So when that happens, the developer gets wiped out. The bank or the non-bank lender, the REIT, ends up owning the property, and they have to decide what to do with it. Sometimes they sit on it for a while and fix it up and then try and, sell it, or they try and get more tenants. But it's a struggle because essentially this is a business that may have, perhaps half of the building occupied. So it's hard to make the numbers work if much of the asset's not utilized and you still have to maintain it. So that's really the challenge with commercial, and it depends where it is. You could have properties that are great, especially new properties that demand premium prices today. But having said that, the older stuff that's down the road from a new development is going to go down in value.
I think the last time we had you on, you mentioned that they're hiding a lot when it comes to the commercial situation.
Well, the regulators dropped what we called troubled debt restructurings a couple of years ago. And in the place now, we have a different kind of disclosure of delinquency. And what this means is, let's say I have a building that was owned by a New York Community Bank, for example, in New York City. And the guys, have been having problems keeping up with their debt payments. So we put them on interest only. They're not paying principal. And we've extended the loan. It originally was supposed to come due last year. We just extended the loan. Now, that loan is not worth what it was. You can't sell that loan without taking a loss. And the tenants, obviously, you want to try and keep them in the building, but it just makes it so difficult when analysts and credit people don't have data because the regulators have said, well, if you modify the loan, you can pretend it's paying as contracted. When you and I both know that if they're paying less every month, or if they're not going to have to redeem principal this year, if we're going to kind of sidestep that issue, then you really don't know what the bank's asset quality is, looking at their numbers. And I think that's a big issue because, in the age of progressive love, especially since COVID, we decided that it was okay for people not to pay their bills, not to pay their loans, not to pay their rent. And we have kind of forgotten what that implies for the owner of the building, because over time that can really damage them badly. And sometimes they'll just walk away. They'll hand the city the keys. Now, a lot of cities will try and prevent a lender from walking away. They'll force them to take care of the building because it's still in their name. But if you read about some of the rent-stabilized buildings, read The Real Deal. It's one of my favorite reads because those guys are in the weeds. They are reporting on this silent crisis we have in commercial real estate. And, being a young reporter at that publication must be great fun because they can't keep up with it. There's so much stuff for them to focus on. They're probably looking at 1 of 10 defaults, Julia. Think of it that way.
Wow. Yeah.
There's not enough time in the day.
Yeah. Okay. So how much does maybe I'll just step back for a sec because we did talk about this last time, the upcoming election. Last time we spoke, you and I talked about a base case for a Trump win. I would love to get an update from you, especially with the recent events. We don't know if Biden is going to stay in the race or step aside. That could change by the time we put out this episode tomorrow. A lot could change, I suppose. Can we just get your big picture take on the election, and then we can start to tease that out, what that could potentially mean for markets, for the economy. Let's just go there.
I think Biden's going to have to step aside. I've been following a number of, what I think are dependable media people focusing on this. And initially, he had total support. But now what you see is that the party is realizing that he may be a liability in November. And I think that's going to force Congress, as they come back tonight, Monday night, they're going to be calling on him to step aside. And, it's a shame, but I think his inner circle failed him. The donors are really angry at the senior staff and the family for not saying to Joe, look, this is a one-term presidency. Think about handing off the baton in a graceful fashion. And the focus of the Democrats should be defeating Donald Trump, right? But instead, they have this mess. It kind of reminds me of the handoff between Al Smith and FDR 100 years ago, because again, in those days, the party didn't have anybody except for this Italian, this Irishman from New York and FDR who could not walk. Those were their two candidates for the party. They didn't have anybody else that was presentable on a national basis. So, again, the Democrats are kind of flat-footed because they have to give it to Kamala Harris. She's the only person who can keep the money in the bank. Otherwise, another candidate would have to start from zero. And again, the big donors in the Democratic Party are not happy with this outcome. And that's why they're going to have to go with Kamala Harris, I think.
I didn't and also you said this the last time, so a month ago before the debate, when this all came to light for everybody, you had actually said this, that you thought Biden would drop, that Kamala Harris would be the candidate. I actually didn't know that about the I'm not super into political reporting, but I didn't realize that about the donation part of it.
Well, the money's donated to the campaign.
Mm-hmm.
And she and Joe Biden are part of the campaign. So if they hand the baton to Kamala Harris, they can choose a vice presidential candidate and keep going. Otherwise, they have to start over. And, that's difficult. It really is. Logistically, getting on ballots, all of that, it takes a lot of time. A lot of money.
How much do you think this election is going to matter to what folks who are watching and listening pay attention to? How much do you think it's going to matter for maybe the broader economy? Mm-hmm. Markets would love to just explore some of the implications.
I think it would be a Trump win is going to be good for the economy, good for the private sector. You see that with all of the CEOs on the street and the big investment types migrating to Trump. The Biden people, despite their rhetoric, have been a drag on growth. We've been going through another punitive, progressive exercise in Washington where various agencies go out and attack companies for alleged wrongdoing. The Consumer Finance Protection Bureau is probably one of the leading examples of that. And I think in a Republican administration, the lack of friction and the lack of having to spend time on a lot of progressive silliness is going to help business a lot. In housing, my God, the last 4 years, Joe Biden has politicized housing in Washington. And it's so stupid, Julia, because, where do low-income families belong? They belong in the FHA program. And instead, what's happened is the White House has tried to push them into Fannie Mae and Freddie Mac, where they get inferior execution. And frankly, they don't belong. They get much better execution, much cheaper mortgages if they work with the FHA. Simple as that. And yet, because of politics, they've tried to put the square peg into the round hole. And it's been I'll give you an example. They want all of these different lenders around the U.S., banks and non-banks, to use 2 different credit scores when they evaluate you for a loan. This is a result of experience spending a lot of money in Washington. They have this new thing called Vantage Score, which competes with FICO. But the reality is now that we fixed the model and we count your utility bills and your rent and everything else, the FICO score model is fine, and we should just use one. Operationally, it's much more expensive. And guess what? All of the credit agencies have all raised their prices during Biden because of this mess. And that cost is going to get passed on to consumers. So, the Democrats talk about helping consumers, but if you really look at what they do, they actually cost them money. And this goes across the board. Here in New York, we're going to raise electricity prices by 20% because of the green program that the Democrats are going to launch. How do you think that's going to go in the next election? You can't make this stuff up. So, politics always sorts itself out. And that's what's going to happen here. Inflation is the key issue in this election. Mark Halperin's been talking about that, by the way. His stuff on YouTube is great. So
I'll definitely have to check that out. Just maybe on the inflation part too. Would love to get your latest there. You're right. It is the issue. It's still discussed widely. Yeah. I'd like to get your take on inflation. Can it be resolved? Does a 2% target even make sense nowadays? Would love to put that to you.
Well, if you're in commercial real estate, it certainly does. You want inflation. Thank you very much. I think the Fed is trying to wait as long as they can to see if they can buy back as much credibility as they can on inflation, because they know that they're going to have to lower rates. If you look at the stress test assumptions for Wells Fargo and Bank of America, which are arguably the 2 weakest of the big banks in terms of income that they can use to clean up a mess, the Fed's worried, I think, about a recession next year, clearly. So given that, they're going to try and wait, hopefully beyond the election. I hope the Fed doesn't act before the election, because that would be a political disaster for the FOMC. And then, maybe a rate cut at the end of the year, just symbolically. But how much lower does it really need to go, Julia? That's the real issue. Yeah. Are we going to roll back housing prices? No. We have a supply constraint. I've been re-editing my first book. As you know, it's going to be reissued next year, inflated. And if you go back through what Paul Volcker really did to this economy, he caused housing prices to fall by about 20%. Do you think this cast of characters we have today would tolerate that? No, not at all. So we live in different times. Since Richard Nixon, really, the idea of borrowing money to pay for today's expenses has been fashionable. And we're still doing it, Yeah. It's really remarkable. So the Fed they're in a tough spot, because as long as the Congress is going to keep funding 25% of federal spending in the debt markets, we're running hot. I was rereading Arthur Burns' comments early on when he was telling Congress, he said, if you increase the deficit, I will increase interest rates. Can you imagine Jay Powell saying that today? So we've really given up a lot of ground in terms of the fight on inflation. And I think eventually we're just going to give it up. And, 2% will become zero. And then we'll probably have to have a higher target, to take care of the debt, for example.
What do you mean by we'll give up the fight on inflation?
Because, remember, this was a political construct. In the 70s, Congress, the Democrats in Congress wanted to guarantee everyone a job. So the compromise was Humphrey Hawkins. And they said the Fed will ensure full employment, quote unquote, and price stability. And also there was a third aspect of it in terms of stable long-term interest rates. But you can't have stability in terms of prices if you're going to run big deficits. You can't. You know, in a fiat system, if you put leverage on the already leveraged currency, then you're going to have problems. And I think we've proven that in spades. The only reason we get away with this, Julie, is that the rest of the world uses our money as a means of exchange. They like to borrow in dollars. The Chinese love to be short dollars because they assume eventually they're going to go down. And that's why they buy all that gold. The Chinese have a long-term bet that says the dollar will go down and we will own gold. Same with the Russians, by the way.
Okay, so let me ask you this because I've seen headlines recently. We had the jobs report on Friday. We're actually recording this Monday, July 8th. I know normally we will record the first Friday of the month. I've seen headlines like of folks making the case. I guess maybe they think there could be a September rate cut. Sounds like you don't think that's the case, or I mean, what would happen in the event there was a rate cut before the election?
I think it would do enormous damage to the credibility of the Federal Reserve Board. I think members of Congress might even call for Powell to resign. The Republicans certainly would. It's just not a good idea. You don't want to take overt favorites in a presidential election, whether you're going to stay on or not. I think it's pretty clear Powell will retire sooner rather than later. But do you really want to put the Fed into the middle of the mix? See, we've created this media circus around the Fed. And so all of the economists who make a living predicting what the Fed is going to do, and media too, have to have a wide variety of guesses out there where they can speculate about what's going to happen. That's how I view people who, even the Goldman Sachs economist, for Christ's sake, was talking about a, midsummer cut when David Solomon was out telling people that they weren't going to cut till next year. Well, David's right, obviously. No, I think they have to wait till after the election. So think November. Powell cuts.
Well, the meeting is scheduled that Thursday, that FOMC after the Tuesday election.
Sure, that's fine. Yeah. That's okay, because then the nation will have a result, hopefully.
Yeah, hopefully. Hopefully. Who knows? Maybe we'll have to do an episode that day as well, Chris. Maybe we can do a special.
Yes, that's right.
I would totally take you up on that. You mentioned the Fed. If you look at the stress test, they're worried about a recession next year. Do you also buy into that as well? Like that is a real possibility, the recession in the next year?
Yeah, I do. And I'll tell you why. I think that there is an impact on the commercial side. Over time, it does have a very depressing impact on the economy when you're destroying billions and billions of dollars worth of value, tens of billions. And you're also impacting the tax base in a lot of large cities around the country, and not just the legacy cities, not just the blue states, okay? We're talking about Dallas. We're talking about Miami. There's a problem when you build a lot of new, the old stuff goes begging. And that's always the case, especially in Florida. New gets old real fast because of the environment and other factors. So if you have a brand new mall or a brand new building that's built to code and it's going to resist all of the things that affect properties down in Florida, the older buildings are going to go at a discount. I think that will, over time, trickle into the consumer side. You'll see employment hurt in some of these spaces. And that, to me, I travel a lot around the country. I always try and keep a finger on how the local people feel. Dallas has certainly calmed down over the last year. It went through a period of growth in that whole area out towards the airport, largely driven by the housing industry, by the way. They all moved out of California and went to Texas because they cut their cost of living in half. That's how expensive some of these blue states are for business now. So, there's a lot of factors involved. All I can say is that consumers will eventually get in the game, Julia. You can see it in the delinquency numbers for the lowest income cohorts in the United States. Those are the people who are getting beaten up right now. You can see it. But the problem is that home prices are so strong, you don't see it in defaults. So it's kind of this silent crisis where people get modified and eventually they're forced to sell. Here's a number that'll, I think, really impress you. 80% of the payoffs today are for people who are selling their homes outright. A year and a half ago, 80% were refinancing their homes. Okay? That's a big difference.
It is.
And when people are forced to sell and take that money off the table and go find another place to live, that tells you how much stress the average man is under right now.
Yeah, that's a good point. Okay, let me ask one more if we have time. Recession next year and why that could happen. But let me ask you this too, and it sounds like in the commercial, let's say Trump is the president. Let's say he wins the election, just as a hypothetical here. And that is the base case for you. Does he get blamed for the recession, or is there a way to mitigate the recession? Because imagine if it's coming from commercial, that's kind of the space that he's known for. So just would love to explore that hypothetical with you.
I think Trump is going to have some interesting problems, which is he should let the tax cuts that he authored expire so we can get control of the deficit. He's talking about cutting corporate taxes and a lot of very Republican proposals. But I think the politician that stands up and says, you know what, I'm going to get the nation back on an even keel as far as spending is concerned, and I'm going to do this better than the other guys. If Trump would run the country the way he runs his clubs, then I think we'd be fine. And that's, I think if he's playing into history books, that's what he ought to do. And make sure, by the way, that you have a really strong chief of staff, because that's the only way this is going to work. So Trump is a tornado. So you need somebody in the other room who is getting people cleared through the Senate in terms of the appointment process and just basically making the thing run. He's been very good at that in business. So let's see if he can do that in the second term.
Wait, can you just elaborate a little bit more on like what the playbook would be on running the country, like how to do it well?
Well, just making the thing that he failed at in the first term was getting people through the appointment process so they can make policy. The Democrats are very good at this. So he needs to make sure that they put people in seats, get them approved by the Senate, and then have a coherent agenda that says, we're going to focus on growth. We're going to focus on helping people. We're also going to roll back a lot of progressive nonsense that's been hurting the economy. And that, energy, for example, I think is going to be front and center with him. But I think in many other areas, just the regulatory assault that many businesses have been under for the past 4 years is going to end. And just that is going to help enormously.
Yeah. I have to say, Chris, I always love having you on the show. I'm so excited that you're going to be a regular every single month. I think we're going to have to do like a post-election, post-FOMC special. Maybe we can do it live that Thursday just to get your update. Because I know my audience loves hearing from you, and I do too. So again,
we have to think about who to get. Maybe we'll grab one of our pals in Washington.
Yeah, maybe we could do it as a panel. We'll have to figure out who. I have to figure out who that guest could be with you. But I think that would be really fun.
My fishing buddy. I took him fishing in June. He was best man at my wedding, James Lucier, who was one of the principals of Capital Alpha down in Washington. Very smart boy. He worked for Rover Norquist. He knows everyone in Washington.
I would love that. I'm serious. I'm going to follow up with you on that.
Get us a date and time, and we'll reach out.
I'm thinking it would have to be like Thursday after the election. That'll be like the 7th, Thursday, November 7th, and after the FOMC presser. So do it like after the markets close. Yeah, maybe we could do it live even. That could be really fun. Okay, well, I want to give you the final few minutes here. I know you have another book coming out. Just let folks know where they can find more of your work. Plug your new book. Everyone go order it, please. And let's leave the audience with some parting thoughts, something to think about until the next time.
No, sure, Julia. Well, I'm Chris Whalen. I publish the Institutional Risk Analyst. I also write a column in National Mortgage News, if you're really into housing. I have a new book coming out in September, which is a biography of Stanley Middleman, the founder of Freedom Mortgage. It's a real rags to riches entrepreneur story that I think a lot of folks in the audience who are getting into careers and building businesses will love. And then hopefully next year, we're going to reissue Inflated after I'm done editing it heavily. And, we're going to have some fun with that as well. I occasionally post stuff on Zero Hedge like I did this morning just to be annoying, but I've been doing stuff with Dan for a long time. I think I was one of his first publishers. So there you are. But I look forward to our next conversation, Julia.
I do too. Chris Whalen, Chairman of Whalen Global Advisors. Thank you so much for being so generous with your time, all of your knowledge, your wisdom. I appreciate you. Thanks again.
Thank you.